All right, good day, guys. I'm just waiting for one person to join before we get started. All right, so because of time, I think I'm just going to start. And today we are speaking on support and resistance. This is just a question. All right, this is just a question which somebody asked. So we're going to speak on support and resistance. So what is support? So just in general, if something is falling, so let's say this is a ball. If you drop your ball, it's falling, this is your flow. It's going to bounce off this area, push up, come back down. Okay, Abraham, thank you for joining. Let's see if you can hear me. All right, I'm not sure if you can hear me, but I'm just going to continue with the session. All right, if you've got questions, just type on the chat box there, then I'm going to respond. So question was support and resistance. So you've got your ball, you drop your ball, it hits the floor here, it bounces, comes back, hits the same floor, and bounces again. So now what are the odds that when this ball comes back again to that same level, it's going to push up? What are the odds? So remember, we're talking about probabilities. So now that we've got two areas where the price is bounced or where the ball is bounced, on the third time when we see that ball coming to that same area, now we can look forward for price or for the ball to push up. So now back to price. If you see now your price coming back to the same level, chances are price is going to push up. So now this is your support level. So if price is coming down, hits a certain level two times, you can now draw your zone and wait to see what happens when it comes on the third time. So just to also get into this area, how you know that price is respecting this area, you also need other confluences. So you're looking at things like liquidity sweep, you're looking at things like fair value gaps, you're looking at things like nameable candles. So you're looking for order blocks in this area, you're looking for fair value gaps in this area, and to see if you can get a nameable candle, especially a pin bar or a doji right in this area here. Once you get those confluences lining up, then you can take your trade. So resistance is the same. If price is now pushing up, so let's clear this. If price is pushing up and it hits two levels, so you throw something, it hits the ceiling, comes down, comes up, hits the ceiling. Now, what are the chances that if this price comes back to that same level, it's going to drop? What are the chances? Right? So once you get 2 points, two equal points, you just mark them into the future. Then now you're waiting for price to come back into this area here. That's your resistance, right? So on the bottom, it's support. On the top, it's resistance. Then now you have instances where price will, okay, where price will do this. So let's say price was coming down, we hit a level, hit a level. So we've got two equal lows here, which is a support. We've got two equal highs here, which is a resistance. So now we are in a range. So if a market is ranging, you'll be trading in between support and resistance. Now, if we do break a support, if a support is broken and retested, that support now becomes a resistance and we look forward for a continuation, right? We look forward for a continuation. Basically, this is how price moves. This is your support and resistance. So looking at the actual chart, mainly it's advisable to mark these zones on higher time frames, H1, H4 daily, because you know the higher the time frame, the stronger the setup. So here you can see on this particular day, we had areas where price was hitting and failing to break. This was the London highs. So you notice I just marked that area. And on the next day, price came to that same area. So we've got a resistance level here. And again, on the third day, price came still to the same area. So now, if you are paying attention to price, or if you also have a bias and you understand what price is doing, once you figure out that you've got a resistance zone, the next thing you're waiting for is a nameable candle or for price to show you something. So what confluences do we see here? We see that we had equal highs also here. Then when price broke out to tap this high, which is our resistance, it was also a liquidity sweep of these Asian highs. We also have a nameable candle, which makes the setup a high probability. So now we're looking for sells, then we are targeting the other side, right? Or the last low you see, or the last level you see, or the next thing you see which price showed you. So it could be this order block. So if you're selling from here, your TP is here, your TP is here. So once price gets here, you're supposed to take some profits or move your stop loss, things like that. These are things which we could explain on another lesson. So again, on the third day, which was a Monday, price came, tapped into the same level. This is our New York session kill zone time. Nameable candle again, price again taking out London highs, also slightly taking out this high from Friday. Then again, we dropped. Where are you targeting? You're targeting the bottom, still the same levels, these zones here. Now, what happened here? You notice that price breaks that zone or that level we had, and we retest. So a support zone is broken, it becomes resistance. And price again sold from here. All right, so I hope this is making sense. It's more or less looking for two levels. This price is already bouncing off this level, right? So we've got resistance, resistance, resistance. Here we've got two equal lows. We're waiting for a break and a potential retest. This is basically how we mark out our points of interest. And again, here we dropped from the resistance. We came down to this level here. We broke, retested, we dropped. Same levels here, little liquidity sweep. You simply need to understand what your price is doing. If you understand price action in general, it will be easier to mark these support and resistance zones. So if we just scroll back a little, here you see that price created this high. On the next day, they created this high liquidity sweep here. So now we've got a resistance zone here, which you can mark. So again, price came faked out above, came below like it wanted to come down. So remember, nothing is 100% perfect. It's actually nice we saw this example. Nothing is 100% perfect. Sometimes price will tap the same resistance. It will show you signs to sell, then it will just go the other way. These are things which happen with price, which is why you need to use a stop loss. You need to use proper risk management. And again, if you understand that price actually then decided to break out, then maybe you might still take a buy, depending again with your bias from a higher time frame. So I hope this helps. I hope this helps. This is something I actively trade. That's why you see it's marked throughout and throughout. Maybe let's pick something else. This is GJ. All right, so here you see I marked this high and this high. You can already see I put it as a zone. Why did I put it as a zone? Because I was waiting to see what price will do when it gets there. Are we going to respect the resistance zone so that we sell, or are we going to break out and retest that resistance? It's now support. Once it's broken out, once price breaks out and retests, now it's a support zone because price is now pushing up. Sometimes price will just be ugly like this, which is again why we use proper risk management and try to be patient to wait for high probability trades. And again, this is just one time frame I'm looking at. Remember, when you're doing your analysis, you want to check multiple time frames. So weekly, daily, H4, daily, H4, H1, H4, H1, M15. Try to get your bias from higher time frames. Then once a zone is violated like this, it means it's not really important. You can remove it or you can ignore it and look for fresher zones. So I don't know if you've got any questions. Let me see if you're still in the Zoom. Please let me know if you've got questions. You can unmute yourself, ask, type, or drop the question for me on WhatsApp. Whilst we here, I'm just going to go to synthetic indices. Let's see what we have. So when I'm looking at my charts, I usually just start with either the daily or the H4. The reason I look at the H4 is because I want to understand what price is doing on a weekly market structure. So right now I can already see that for just for this week, price is sort of pushing down. It was sort of going sideways, then it's sort of pushing down. So this is a synthetic index called BOOM 1000. The booms are only buy. So I'm not really worried about it now until the trend changes and starts to push up. That's when I start looking for buys, right? I try not to force trade. So analyzing something shouldn't take you 1 hour, especially if it's one thing. Right now, we're already done with B1000. The only thing I'll say I want to start looking for is for a structure to be broken, price to show me that it wants to push up. So you can see it's a break of a resistance area or a zone or a level. Then I wait for a retest. Then I take a buy. If that doesn't happen and continues pushing down, I'm not buying, right? This is just my personal preference. The crash indices, I only look for sales. So again, crash 500s. This one has been downtrending, so I could actively trade this one. So right now, as much as I want to look for sales, what I also look for is where can price potentially push up to first before it sells, right? Remember, before price moves in a certain direction, it always does stop hunts, fakes people out, collects orders, people go the wrong way, then price will then push. So I've got this zone, this order block. Let me zoom in. So I've got this zone, which is my immediate point of interest. I've got this level as well, which lines up with the 200 EMA. So I've got another second point of interest here. Then I've got this major red line you see, which is going to line up with the 50 EMA. But with the way the 50 EMA is looking, sort of shows that we got a strong downtrend happening here, which means chances are price might not come as high as this area. We could just tap into this level, drop, or we could simply drop from where we are because this is also a dynamic a resistance zone. These moving averages, they also work as dynamic support and resistance levels. You see here, price came, tapped the 200, rejected, tapped the 200 again. That means that 200 EMA is acting as a support zone. Eventually, we break and retest on the bottom side. So now it's now what? Resistance. So again, like I said, it's still a point of interest. Point of interest number one, point of interest number two. We might get up here, but I don't think so. So if a sell pattern now presents itself on a smaller time frame, okay, I've marked my H4, I go to H1. When I come to H1, what am I looking for? When I come to H1, we both see that we've got these two equal highs. This means that we've got what? A minor resistance zone right here. All right. So what price usually does is we have this 4-hour zone, which is the red line we placed. We've got a minor H1 zone here. So what could potentially happen is price might do a liquidity sweep above these equal highs, right? So that means we'll break above, but maybe we might just tap into this zone. Maybe it might be a pin bar, right? Once I get that type of candle, then I'm looking for sales. Why? Because my bias from a higher time frame is already telling me that this asset is downtrending. So if a sell pattern presents itself, the only thing I can do as a trader is to execute the trade and see what happens. My stop loss will be placed outside the nameable candle, and usually my risk to reward is just 1:2, depending with my time frame of entry. So M15, more or less the same thing. We'll be looking for a pattern. So M15 right now is not yet bearish. Right. Remember our H1 levels are these two here, right here. So we've got a minor level here. This also means, remember, we're working with probabilities. This also means price could actually just tap here and start selling. They might not even get here, but we are open to seeing price come as high as this level. Then from there, if a sell pattern forms, I take the sell. What does a sell pattern look like? A sell pattern simply looks like this. Price will be pushing up. We do a liquidity sweep. We tap into a point of interest. We push back down. We break a structure, retrace into something. Either we are retracing into equal highs, we are retracing into this level, we are retracing into this broken zone for something like this, or we are retracing into an order block in here or a fair value gap. So wherever price reacts in this area, that's where we take our trade from. That's the sell pattern I look for. If I'm looking for a buy pattern, it's the same thing. Price will be coming down, break of structure, retraces, starts to push up, maybe equal lows, maybe a liquidity sweep. Those are the patterns I look for. So maybe if you are following me on WhatsApp or TikTok or Telegram, you see if you follow my setups, it's the same patterns I look for. And these patterns, I usually just look for them within my trading time. Okay, so I think that's all about support and resistance. If you still have any other questions, you can still ask. This session was recorded. I might post it on YouTube. I might just share it with the on the Telegram group. I'm not yet sure for now. It depends with my time and schedule after the Zoom. But it was recorded, and if you also need this session to your inbox, I'll drop it to you so that you can go through it in your own time. Then, if you want to back test, just pick any asset, then pick any one time frame, then just scroll back, and just look at how price moves. Right? Look at how price moves. Look at how price respects certain levels. For example, check how we get in this level here. Right? So we've got the first touch here, second touch here. So now we actually have a zone to work with. Third touch, we're looking for sells. We're looking for sells. We're looking for sells. That's a resistance zone right there. Then, if you want, you can just draw it into the future. Because in the future, price can still come respected. As you see here, then eventually it was broken. So as long as you're actively trading, I would say if you're marking your charts, just put your zones into the future, then see how your price acts when it eventually comes back to that same level. So pick an asset, back test, forward test, mark your zones, see how price reacts when it gets in those areas. This is B5. This zone, I marked it. Did I even look at this yesterday? I'm not sure if I marked this yesterday morning, but you can see I just put this line. By the time price was here, I was already doing something else. I was not on the charts. But now look at this. Price breaks this point of interest which I had, and they retested it today. And that same level I marked, it's in line with the 50 EMA, which is a dynamic support. Now, if I was on the charts at this time, I could have bought. You get it? So it's all about marking your charts, marking your zones, and waiting for price to get to that zone, then seeing what price does, then executing your trade. You're not just trading randomly. It's all about patience, patience, patience. So yeah, like I said, I see there's no questions. Let me just check my WhatsApp if you dropped any question. Okay, I don't see any questions, so I'm assuming everything is crystal clear. If you still have a question, please let me know. Maybe I'll address it on another lesson. So I tried as much as I could to just explain about support and resistance. And yeah, I think that's about it. It's all up to you now to back test, forward test, mark your charts, and let me know how that goes. I see you typing a message. Let me just wait um, before I end this session. emphasize on back testing. So back testing is basically, you see, if you're using a PC with a mouse, you just scroll your charts back in time. Like this, you see how I'm scrolling my chart on the 1 hour time frame right now. So you can start from the 1st of October. 1st of October was somewhere here. Then start to mark your charts. Just look at how price is moving. Okay, we've got equal highs, equal lows at this certain point. I want to see what my price is going to do. Is it going to come back here and buy, or is it going to break? This is where you see different scenarios of how price plays out. Then now you need to familiarize yourself with those patterns. What time do the patterns form? Uh, Under what time period do they form? Let's say you're on H1 and you see that a certain pattern takes 2 days to form. That means whenever you see that pattern forming again, you are not in a rush to take it until you see a time lapse of 2 days. So, for example, this high was set on this day. Then on the second day, you can see our price kept coming to the same zone multiple times. Uh, that's a resistance zone right there. Then you want to see mark other things like order blocks, everything you know. So you're marking order blocks, you're marking zones. See how price is reacting on those areas. What time is it reacting? What other confluences are there? That's basically how you backtest. Then if you are familiar with TradingView, if you pay the premium, if you pay for the premium package, you can backtest on TradingView. TradingView is much easier now because let me actually open it. What happens is when you want to back test, I'm not sure where's that thing, where's that thing. You just scroll back in time again. Then there will be like a scissors, which cuts all the price action to your right, which means whatever transpired, it becomes blank. Then you replay the candlesticks, they will start to play again. Then you mark your charts and you mark your trade, put your risk to reward, and see how that trade would have played out. But if you want this, I'll show you on another video because right now I'm running out of time. But I would say you need the premium package though. You have to pay for this package so that you can get it on TradingView. But if you're on MetaTrader 5 or MetaTrader 4, you can simply just scroll back on your chart. The only difference is here, you will be seeing let's say you are backtesting from here, these candles are visible. So you just have to familiarize yourself with patterns as you backtest. Do you have a session high? Was there a liquidity sweep? Was there resistance? How did price play out? So I hope you answered the. Any other question before we round up? Any other question? No questions. Okay, cool. So yeah, like I said, I might drop this video on YouTube, but maybe later in the day, because right now I'm going away from my PC. Or if you need it, I'll drop it on your Telegram. Then you can just go through it in your own spare time. So if you watched until the end, thank you so much. If you're watching this on YouTube, let me know if you want me to elaborate on something else. Drop your questions, and yeah, enjoy the rest of your day. Good trading.